To another Sunday Night Futures Live. This is Bob Desmond, and we're going to be going over a lot today. A lot. Before I begin, my voice is a little bit shot. I took a day yesterday. I was totally wound up. Took a day yesterday. I did a mental health break. No interweb all day long. Felt great. But it's good to be back. Members, I did post in the members area the week ahead commentary. Franklin, hello. And we're going to talk about a lot tonight. We're going to talk about some watch stocks we have. I'm going to go over them using TrendSpider. As a matter of fact, since I brought them up, folks, don't settle for ordinary trading software. Take advantage of our 7-day free trial offer to TrendSpider, automated technical analysis. Speed up your grunt work by using the automated technical analysis functionality that TrendSpider offers. You can head on over, use the link below. I did provide a link this time. Usually I forget. Take a moment, watch their demo tour, have a 7-day free trial offer. You find winning chart setups with their scanners, time your trades with precision by using their trade alerts. I use them all the time. Again, I'm going to be setting them up tonight. We have some extreme oversold stocks we want to talk about. We have Microsoft. We're going to look to reshort. We booked profits on that the week before last. We're going to look to reshort that. I will be setting up an alert. So automate your grunt work, speed up your technical analysis, get TrendSpider, 35% discount code below. What is my discount code? Let's figure it out. Where is it? I'll pop it up there because I always get it wrong. 35CON, 35% discount code. Let's say hello to people. Abel, hello. William, hello. Larry, get a Powerball ticket, Bob. Jackpot, 670 million. Sounds like a game plan, pal. Abel, hi. Can you please kindly do a technical analysis on a chart of ASML? If we have time, absolutely. Joseph, thank you for the kind words. I saw your comment the other day on YouTube. Thank you very much. And for you folks, you just reminded me, if you could smash that like button, I'd really appreciate it. Thank you very much. And let's get to it. Let's bring up. Let me share my desktop here. I thought I was sharing it. This is TrendSpider. Let's take a look at the pre-market activity. And let me maximize as best as possible. Let's take chat overlay off. Do a little picture action. Let's get rid of this. We're good to go. Let's do it. Okay, so let's kick things off first with the dollar. There's a reason for that, and that is that the inflation data coming out of Europe is horrible. It's really, really bad. I'm going to go over a bunch of articles in a moment. And the euro did not look good last week, but the dollar came off of its highs as well. Net, a very strong week last week for the U.S. dollar. Bias is still to the upside for the dollar. So dollar bulls, you're probably going to win out here. But short term anyway, as of tonight, we're seeing a little bit of weakness here on the U.S. dollar. No weekly lows as of yet. For that matter, we're nowhere near it, to be honest with you, but no daily lower low either. So this is a 4-hour chart. Let's do a deeper dive to get a feel for. Yeah, this is not looking good here. We're going to create an alert. I just want to know if we are at new daily lows at a bare minimum. Okay, so our alert is set there. Obviously, currencies are very volatile. This could change at any time. It could spike up higher. But at current, not a good open for the dollar. That's good for us. That's good for our positions. We like that. So if we're talking about the dollar, Next stop is gold. Now, gold, folks, did something strange last week, and I view it as a tell. And I've been asked by a lot of people, why are you sticking with the gold trade? Aren't you afraid that it hasn't rallied with other commodities? No, I'm not. The reason is that I believe that what we're seeing, we saw it in earnest right around the final passage of Basel III. Now, if you're not familiar with it, type in Basel III and you get up to date. Basically, paper gold is no longer an asset that is equivalent to physical gold. So the allure, the luster, if you will, pardon the pun, of paper gold relative to physical is far less desirable than what it once was. So physical gold is tier one collateral with central banks and other banks. So if banks need to go get overnight lending, they got to put up collateral. Physical gold gets you more money than what does paper gold. Simple as that. So what we saw, as a matter of fact, it was a Sunday night not too long ago. Let's bring up a 4-hour chart. I'm still on here. This is back in August, right? Let's hide this, covering up my dates. No, that was not. Here it was. I remember this night clear as day. This was a Sunday night, and I was on another chart, and through the chat comes a question about, hey, what's going on? What's going on with gold? And so we went over to gold, and my exact words, it's crashing. And I predicted then that this was a washout. They were washing out week longs. They were covering meaning the big banks were covering short positions and then getting net long. We couldn't confirm that they were getting net long until the following Tuesday, meaning not the first Tuesday post this crash, but the following Tuesday. Why? It's because you get something out called a COT report, Conviction of Traders report. And on that immediate Tuesday, you saw net selling of gold. And I said it back then. I said, I bet you next Tuesday, you're going to see net buyers of institutions of gold. Sure enough, that's exactly what they did. This sell-off was wiped away in a matter of days. Yes, we've still seen some weakness on gold, but lately, gold, despite the rising US dollar, has been moving up. The miners, not so much so. And here we have a potential, we're not there yet, a potential breakout 4-hour time frame of gold. So very, very positive, a way to start out the week, no doubt, but the dollar is still in an uptrend. Therefore, we're still reluctant to say, hey, it's game on to the long side for gold and the mining stocks. But it's looking good. Let's do a deeper dive here. Go to a 30-minute chart. Higher lows, higher highs. But what we want to know is this. Are we going to take out prior highs? That's all that matters. And that alert is set. Moving on, let's check out silver. Silver did very well last week. Again, the dollar was up, and that's what really built my confidence some. If the dollar was down, it's expected that silver and gold would be up. But in the case of last week, the dollar was up, and you saw silver and gold up as well. Woof, that tells me something. Here's silver. Silver is up just shy of a 0.25 percentage point. Potential breakout here. I'm not going to call this a breakout quite yet. Let's go to a 4-hour chart. We want to keep that higher level view. You know what? We can call this a breakout. We broke out here on Friday. And now we're doing a retest of the breakout point. So let's change this to green. Silver looking good. So a strong start to the week. Sticking with the commodities trade for a moment. We're seeing a lot of pressure in the commodities market, in particular energy. Energy had a great week last week. I suspect It's going to have another great week this week. Oil kicking off the week strong, 4-hour chart, and we have a breakout. You got to have oil moving up higher to keep the energy stocks moving up higher as well. And there you have it. So let's set our alert up. We want to get notified if oil puts in a new weekly high. Come on, Bob. Jesus Christ. Can't spell tonight. At or above, good. We're good to go here. Moving on. Let's take a look at home heating oil spiking. I purposely filled up a couple of weeks ago, 100% on home heating oil. I told my wife, I said, listen, we got to keep this tank full. Can't let it draw down because we're going to come up with a big bill soon. Home heating oil is going to spike. Sure enough, we did a nice arbitrage there, and oil, home heating oil, ripping through the ceiling. It's very popular here in the Northeast as a product to heat homes with. Let's check out natural gas. It's been in fuego. It's a little bit extended on a weekly and daily time frame. I think we're going to pull in here a little bit, but at current, we're up nearly 2% on the session. That's the thing with commodities. Once they get going, you think that they've gone as far as they can, and all of a sudden they surprise you and they just rip up higher. And if you're short, they will rip your face off. So natty gas looking very, very good here at the open, but it is extended on RSI. Daily RSI is what, about 83. Looking at Boyle, the leveraged ETF, I assume it's going to be the same with UNG. Relative to the Bollinger Bands, quite extended pricing action implies that you're seeing some profit taking. So you may pause here, may just consolidate, maybe simple as that. Let's take a look at some comments. Cena, hey brother, good to see you. Paul, good evening to you. Abel, how about, can you please, oh, okay, ASMR, we saw this one. We'll take note of that. I'm flabbergasted, love that word. I'm flabbergasted about how cheap precious metals are considering inflation, and precious metals are critical for semiconductor chip manufacturing. I think it's an opportunity of the lifetime. If you think about it, you know, you take a look at sentiment, and you have, it was a couple of days ago where you had pretty much every single gold mining stock trading down below its 200-day moving average. That sentiment is horrible, but it's so bullish. Once you get all the sellers out, there's only one way to go, and that's up. So I'm very bullish on the space. If you're a contrarian and you're looking for an opportunity in a sector that is just hated, look at the gold stocks, look at the silver stocks. They're hated, and they're making money hand over fist. And if gold and silver spike up higher, they're going to be printing money. Abel, smash the like button. Yes, smash the like button, please. Langley, Yankees win. What else do we have? Why is this not popping up? Oh, there it goes. Same one. Randy, hey to you, brother. Good to see you. All right. Let's continue on here. All right, so we did silver, gold, oil, nat gas. I just want to take a look at copper. once copper begins to get going, and it's already up nearly a percentage point this session, if it begins to break out, you're going to see a lot of pressure on commodities to get pushed up higher. Why? It's because copper right now is being subdued in price right now because you have the Chinese that are flooding the market with copper to try to keep a lid on prices. And if you see copper begin to break out, that means the Chinese are probably out of copper to dump, and that copper is going to rip up higher. So we're watching copper very closely. It's amazing the commodity inflation that we're seeing, and that it's not reflected yet in gold. Let's take a look at agriculture. Oh, look at wheat. Holy cow. Wheat is ripping. What a day on Friday. Actually, began on Thursday morning. You had this little W formation form, and then it just ripped. Could you imagine being short this? Let's take a look at it on a weekly time frame. Oh, man, look at that. That's pretty. So wheat looking strong. Let's stick with the agriculture plays for a moment. Soybeans, nothing much happening here. Corn, looking good. Corn is consolidating very nice, and you can buy all of these. You can use the Tetrium funds, and they're traded just like ETFs. They're ETNs, but they're same thing. So corn looking good. Very nice. Okay. Oats. Oats looking really, really good here. So you got to wonder, right? You got to wonder, we have stagflation. You have inflation that's being, the numbers are being manipulated by the federal government. And you got to wonder, why isn't gold rallying? How manipulated is this metal? And is it the fact that they're trying to keep the prices low so that meaning the banks, can get net long of gold and get rid of that paper short position and allow gold to rip up higher? I think that once gold breaks out, it's just gonna be a rip your face off rally that people are not going to know what hit them. And you're going to look back in time. You're going to take a look at these gold mining stocks and gold, and you're going to say, wow, that was the opportunity. I remember Bob Desmond saying it on Sunday night that they're manipulating gold lower to put on a net long position. They're trying to, and believe me, I feel this every once in a while, but I take note of it. You get demoralized. You have a large position. It has every reason in the world to go up higher, yet it doesn't. Think about it. So that demoralization is to try to keep people out of the arena. These guys want zero competition. They want to be able to pick up gold on the cheap. They don't want it at market prices. They want it at deflated prices. That's how they operate. Rice, not much happening here. All right, that's enough. Let's go over to equities. I wanted the equity markets to simmer down some. Now we can get a good feel for how we're opening up. Let's begin with the Russell. So the Russell on a 4-hour time frame broke out last Friday. Right here, this 4-hour bar into the back half of Friday's trade. Now, the question is, do we pull back and do we retest? I think that we do. But do we fail, or do we find a base and begin to break out? That's the big question. 15-minute chart. You can see we gapped it up and then he faded it. Okay. So a healthy chart. Where are my other futures here? I may have lost them. I did. All right, let me go back, and here we go. S&Ps. I got to tell you, I don't like this chart. This is like a rip your face off short covering rally, and we're right up and into resistance. We hit that resistance level on Friday. Pardon me, a little bit of caffeine time here. And we're flirting with another effort to try to break out. We are up over a quarter percentage points. 15-minute view, looking good, higher lows. So it looks like they may go for another attempt to try to break the S&Ps out here. So here's our line in the sand on the S&Ps. We're going to create an alert right at the declining upper band of resistance on the SPX or the E-minis. Okay. Mid caps, very similar price action here. A rip your face off rally, and I kind of predicted that. I did the morning show on Friday, and I said, you know what, the futures are down, but don't be the least bit surprised. It's still posted on YouTube or we're on Twitter, wherever you're watching this. Don't be the least bit surprised to see the markets close up today. Don't be the least bit surprised. Sure enough, short covering rally, because a lot of times traders, they don't like to go home short over the weekend, and they'll cover those shorts in advance of the close on Friday, and they'll just reopen them on Monday. So there's our upper band of resistance. We can go up higher here. There is some resistance at 2,700. We found a bit of resistance on Friday afternoon at 2694. This is the mid caps, folks, not the S&Ps. All right, now to our Nasdaqs. Nasdaq 100. We are up strong. This leads me to believe that we have the 10-year bond note rallying. We're going to take a look at that in a moment, with yields pulling back some. So nice open here, 15-minute view, very nice. It's building on its opening gains. Good. Let's take a look at the 10-year. It's all about the bond market, folks. The bond market is the tail that wags the stock market dog. And this is the 10-year bond. Yep. They are rallying the 10-year treasury and dropping down yields, allowing for tech to move up higher. Okay. So now we have a feel for how they're positioning for the new trading week. If we have time at the end of the show, we're going to come back here, see whether or not there's been a change in the price action. So stick around. Let's go over some headlines and some economic data as well. All right. So last week we had a bunch of economic data that came out. For the most part, some good, some bad. Durable goods, very, very good. Good number. The problem is we can't get consistency, and consumer confidence took a hit. The markets had expected a read of 114.9. Actually, was a big miss of 109.3. Initial jobless claims, big miss And the prior read was revised higher. GDP, they revised it up by a basis point. Chicago PMI missed. Here's where things get interesting. Consumer spending, good. But disposable income declined. So is the spending due to outlays for energy, food? Because their disposable income is declining. Something just fired off. Let's see what that was. We have a higher high on something. Gold, new higher high, good stuff. Let's circle back to gold for a moment. Very nice. Gold is up now by a little more than 1/3 of a percentage point. Now, the psychological level that you need to watch for gold is 1800 to 1810. You get to close above that mark, and we close out the week. Don't worry about a day. Worry about a week above that mark. It's very, very significant on a psychological basis because that resistance level has been very, very porous. We'll close up above it for a day, then drop down below it. In a ruthless fashion, they'll drop it down. And that's the demoralization process. So we're still a good ways away from that 1800 mark, but we could be there like that. So don't underestimate how fast these commodities could rip higher. So if you're not currently positioned, think about nibble, nibble, nibble at these depressed prices. So gold looking good and building on its gains. Good stuff. Let's get back to the economic data. ISM manufacturing index came in better than expected. That's good stuff. Core inflation rose. U.S. inflation rises sharply again in August and stays at 30-year high. No joke. And that's what they're going to admit. That doesn't take into, they use hedonic adjustments to keep inflation artificially low. Owner's equivalent rent. They don't include what you're paying in additional rent if you're a renter. They say, well, what if this guy was a homeowner? Would it be cheaper? Oh, yeah, it would be. Okay, let's substitute out that number for this number, keeping the number artificially low. You can't make this stuff up. All right, economic data coming out at factory orders tomorrow, this coming week. Trade deficit, nobody paid. You know, years ago when I first started trading, this was a big, big number. Nobody pays attention to it anymore. Doesn't matter. ISM services index, that's a big, big number. All right, so this week, whenever you see the ADP report, that means it's the Pimp Mac Daddy of all economic reports coming out this coming Friday. What might that be? Non-farm payrolls, the Pimp Mac Daddy of them all. Watch your average hourly earnings. So this could really spark a rally in this market. And you might be thinking, you know, oh, yeah, I guess that if non-farm payrolls comes in very, very high, the stock market will like it, right? Because the economy is doing good. No. That's Realville. But in clown world, which is where we trade nowadays, a good jobs data is bad. Why? The Federal Reserve may have to do something and raise rates or reduce their balance sheet. God forbid they do that. Average hourly earnings, watch this. Very important. If you see average hourly earnings rise, it may sound good because we live in reality. But in the world of Wall Street, that's a bad thing because it's inflation. They don't want you making more money. They want you putting more money on a credit card and living beyond your means. The last thing they want you to do is to get paid more for that widget that you're creating. So that's the reality that we live in today. As sick as in perverse, as sick and as perverse as that is, that's reality. Our train, hey brother, good to have you. Okay, valuations. We actually saw valuations come in last week on the Buffett indicator. We hit a high 2 weeks ago of 3.1 standard deviations beyond historical norm in this line here. But still, we remain strongly overvalued because we are at a 2.8 standard deviation move beyond the historical average. Very, very expensive the stock market is. And we're going to have earnings coming out soon. We are now in Q4. So get ready for silly season, which is going to be earnings season. The Schiller PE ratio that came in last week as well, but still highly elevated, very expensive. 37.63 is the read on the Schiller PE ratio. Now, last week, something strange happened to the Fed's balance sheet. It declined. It declined. And I always say, if you always want to see a tick-for-tick correlation between charts, always look to overlay the S&P 500 on top of this chart here, which I'll share. If you want to bring it up, save it to your bookmarks. I just popped it in there. It's good for YouTube, Twitter, mostly every channel. Facebook, you're able to open that up in. But they just gave me a warning that it's not can't be open on some channels for whatever reason. So the Fed's balance sheet pulled in last week, but oddly enough, what happened last week? Or not so oddly enough? S&P 500 pulled back as well. So while 1 week does not make a trend, I can pretty much guarantee you that as the Fed's balance sheet, if this trend continues, and it's not a trend, if this anomaly continues and we get a pullback on the Fed's balance sheet, you're going to see more weakness in the U.S. stock market. Now, Europe, I mean, the headlines are littered with, particularly out of Germany, German power plant halted after it runs out of coal. Have you seen coal lately? Here's arch coal ripping through the ceiling. I mean, the Green New Deal is really doing wonders. The Chinese and the Russians are laughing at us. As we make every effort to try to electrify our vehicles, we are driving up the cost of energy and the usage of coal. So that which they're trying to destroy, meaning fossil fuels and emissions, they're only causing more of it. This is what happened when government gets involved in anything. It turns hard. I wanted to say a bad word. It turns to crap. All right. Whatever they touch turns to crap. More headlines. Europe's rising energy prices will force factory closures. Okay, so let's read into that. What happens when you close factories? Well, you lay off employees, right? What do? Well, they sit home and they buy whatever they can buy because they're going to get unemployment checks, government stimmy checks. And what happens? It's a self-fulfilling prophecy. They cause more inflation. Well, you may be saying, how is that? Well, if you're not producing and you're only buying, you have lots of dollars, or in this case, euros, chasing too few goods, driving up costs. Running out of space, UK farmers to cull 120,000 pigs amid labor shortages at slaughterhouses. So they got to kill all these swine because nobody's at the farms slaughtering them, I guess, to butcher them, whatever they do over there. So they got to kill all these animals. What happens to the price of pork? Through the roof. People aren't going to stop eating. France begins price protection. The last thing you want to see the government do is protect you. That's the last thing you ever want to see. Look at Australia. Their cops are beating up people hand over fist for being 1 block away from their house. Under what guise? It's to protect you. The last thing you want is the government saying, I'm with the government, I'm here to protect you. That's stolen from Ronald Reagan, the great Ronald Reagan. God rest his soul. So France begins price protection measures to shield consumers from soaring energy prices. This is going to be a crap show. Now, you may be saying by this point in time, wow, those Europeans, they are completely screwed. Thank God we're here in the United States. No. We are not immune, not by any stretch of the imagination. We have ships that are off of our coast that they cannot unload. So by virtue of the fact that they can't unload them, you're taking more shipping capacity offline. What happens to shipping prices? Through the roof. Look at the Baltic Dry Sea Index. Here's a monthly chart. This is the cost of shipping of dry bulk goods, not liquid, like tankers and whatnot. I'm sure those prices are going up higher as well. But look at this, ripping through the ceiling. We're at highs not seen since 2008. So this is all very, very inflationary. Fed's favorite inflation signal, this is a PCE, rises at the fastest pace in 30 years as savings slump. This is here in the United States. Government debt is taxation without representation. No true words. Here's what they want to do. Here's the chart of our debt. What they want to do is, and they did it post-World War II, we have been above 100% of GDP before in terms of debt, and that was back in World War II. But remember, we were a creditor nation back then, and we allowed inflation to run for many, many years until, of course, you got to the 1960s and you wanted guns for butter. That was Lyndon Baines Johnson, one of the worst presidents in history. Guns and butter that forced Nixon to take us off the gold standard, which is why we find ourselves in the nightmare situation we are right now. So what they're trying to do is what they did back at the end of World War II, and that is to inflate away our debt. The problem is back then, you had smaller government. They curtailed the size of government. We were a creditor nation. We were a manufacturing powerhouse post-World War II. The rest of the world was in shambles, including China, all of Europe, all of Russia. We were the only game in town. So we were able to do that back then. Now they want to have a repeat of what we did post-World War II, except we don't have the manufacturing base. We don't build anything. Moving on. So the progressives blink first, offer to cut spending short to reduce 3.5 trillion plan. No matter what number comes out of this plan, it is socialism. The power that's going to be given to the IRS is going to be immense to look into everyone's bank account for transactions of $600 or more. They want to know what you're doing. So it's not the money, it's the privileges and it's the powers that are granted the federal government to be able to get into your personal life on a daily basis. So this is a problem. It's ever growing, and I hate to wish time away. And frankly, I have little confidence in the Republicans, but I can't wait for the 2022 election to at least have some sort of a road bump here against what we're seeing. Hopefully, frankly, it's a uniparty system right now, but these people that are in charge are out of their minds. Tom, Costco pork prices up 60% this week. They need the paper contracts to control the price. Yeah, they have no other choice. Absolutely. Well, technically, that's why you have the futures market is to protect the farmer. So yeah, the system is working as it should, which is a great thing. They have a way to hedge their costs. Chris, I agree with that. Cool. And people don't need to agree. I mean, if you disagree, I would, I love a great debate, but I don't make this stuff up. This is just what's out there. So I want to segue into geopolitical risk, and it's rising. And at its epicenter is China, ever growing. Let's face it, that China was the host country for the cerveza sickness. And now, after our humiliating withdrawal out of Afghanistan, and I'm hoping that this headline is wrong. I hope that we land the military planes here. But it appears as though we may have the Chinese military that took over Bagram Air Force Base over in Afghanistan. We spent like $4 billion on that base, and we just gave it over to the Chinese. Amazing. Now, over the past several days, these headlines, I'm going to work backwards here. Friday, record-smashing total of 38 PLA, People's Liberation Army jets, breached Taiwan airspace. This has been going on week after week, but now the incursions are, what the Chinese are doing is they're normalizing the incursions to make it commonplace. Taiwan, this is as of Saturday. So you have Friday, now Saturday, Taiwan lashes out at China's largest ever aerial show of force. Sunday, China sends nearly 40 jets toward Taiwan for second consecutive day. This is the normalization of an incursion into Taiwanese airspace. So this is the geopolitical risk that you could see forcing gold and the dollar up in tandem if we get kinetic. If you see kinetic warfare take place over in the Straits of Taiwan, big problem. Now, moving on to, and you're going to see more of this. I think that there's a purge going on at the Federal Reserve because, oddly or not so oddly so, the two Fed chairs that were ousted last week because of their insider trading, which corrupt as hell, of course, but we have another one that's now joining. So we have Kaplan and Rosengren who retired last week, and now you have the vice chair, Clarita, who made millions immediately before Fed Chair Powell's emergency pandemic statement. So the guy was in bonds, sold the bonds, moved into equities because he knew that this statement would drive up equities higher. So he's trading off of insider information. Now, you got to take a look at who benefits here. So you have the progressives in Congress. They don't want Powell reappointed. They want somebody far more left-wing. So what's the consolation prize? Get rid of those who are more on the hawkish side. Isn't it strange how Kaplan, who was, besides Esther George, the most hawkish one on the Fed, Rosengren, a middle of the liner in terms of being hawkish, he's gone now. So if Clarita, who's kind of on the dove side, goes away, I think that the two people or three people that put in their place will be very, very dovish and will signal to the markets that we have a Federal Reserve that's going to stay very, very dovish for a very long time. So, in keeping with the corruption that we've seen here, Pelosi has purchased huge, nearly 1.5 million in NVIDIA. This needs to get fact-checked, to be fair to Nancy Pelosi. She also purchased, again, needs to be fact-checked. This is a Twitter It's a tweet. So I have not seen her disclosure forms. So to be fair, I don't want to spread misinformation, but let's assume on face value that it's true, because we know for a fact she's done this in the past. She has purchased, along with her husband, she has purchased 50 NVIDIA call options at strike of $100. Those are deep in the money call options. So this is a very bullish bet. The expiration is September of 2022. So she went out a year. So here's NVIDIA. Nice pullback. Looks like she got in at a good price. We're still holding. Well, you know what? We broke trend on NVIDIA. We actually did. Broke trend. Let's bring up the chart in NVIDIA. Doesn't mean it can't recover and then move back up higher, of course, especially if yields pull back. I don't have NVIDIA up here. Anyway. Let's annotate this. And we're going to track Nancy's play here. Yeah, we broke support last week on the video. Okay. What else do we have? Well, this is not good news, but I was going to talk about this. Let's pass on it. All right. Chris, Taiwan's going to get taken? Yeah. Nothing American can do, unfortunately. I don't think it's nothing that America can do. I think we can do it. We don't want to. They don't want to. That's the thing. Everything that we do to ourselves in this country of late, whether it be the reaction to the cerveza sickness, whether it be the withdrawal from Afghanistan, point a finger at it. Whatever's gone bad, it was self-inflicted. Tom, Venezuela is here. Feel like it. Yeah, it's going to get worse. I agree. All right. Let's do some stock chart requests. Okay. I want to set up some alerts first. This is FedEx. We opened up a position on FedEx last week to the long side. Members, I went over it on the week ahead commentary. I want to go over a few stocks. MJ. These are our watch stocks for the new trading week. Now, we have put in a new monthly low on MJ, but I'm liking the daily and weekly setup. Weekly chart. We're going to create an alert. I want to know if we break to a new weekly low. We'll just watch if it does. All right, daily chart. So the daily chart, and here's the value of the automated trend lines, all right? So what we're seeing here on MJ, and this is a weed play, is that what we're seeing, I'm going to throw on the automated trend lines. the shares bounce around this support level here. We bottomed out back on September the 20th, rallied, pulled back, higher low. Nice reversal day on Friday. MJ looking good. I want to check out seasonality. I don't know how much data is here for MJ. There's not much at all. Actually, this is the wrong time frame. There we go. Now let's check. We have some going back to 2016. October is a 50-50 month in terms of being up. November, December are horrible months. But this is only 6 months worth of data. So take that at face value. Let's go over and take Tom Lu, uranium. Uranium's looking good. UUU, is that the Sprott ETF? I guess not. It's an individual stock. Tom, this is your symbol, right? This is what you wanted? All right, monthly chart. No? What's your symbol, pal? You got it, Franklin. All right, I'm going to go to Franklin. You confirm that. And we'll circle back to you. Go. Looking great. We have a new monthly breakout. This is for those not familiar. Joe's is an ETN putting you long of coffee. A new continuation breakout, rock solid breakout, weekly chart. Beautiful. I think that this is one where it would be great to get a pullback and a retest of the breakout point. And we're good to go. Let's go to a daily chart. Yeah, it's bullish. Very, very bullish. The one thing that I would offer that you should do is this, is if we do get long, I'm going to want to know where to book profits. So I'm going to use this rising upper band of resistance as our guidepost. Profits at resistance. We're going to keep this active for a good long time. And if it happens 3 times, so 60 days and or 3 times hit. And we're good to go. So if we bought here at support at around $55 a share, then we're looking at this rising upper band of resistance as our ceiling. And we could scale out of the trade if we choose to. If not, then we just remain longer term. It depends upon the longer term charts. But that would be the game plan. So coffee looking very, very good, bullish. All right, back to so 4 U's. I don't know if I think that's what I typed in before. Energy fuels, is that accurate? Here, let's bring it up here. That's showing as a company, not as an ETN. Anyway, I'm going to go with it. Energy fuels, monthly chart. I like this chart. There's a lot of resistance up here. But the longer consolidation, the greater the validation of any breakout. Rick Roofing, what's up, brother man? Not too much, man. Having a good time. Thanks for being here. Good to see you. You're welcome, Frank. Anytime. Frank, are you in, Joe? Are you in that play? I mean, we were watching it when it first break out in a monthly time frame. So I'd be looking for a breakout here on quadruple U. No sensitivity. All we care about is the breakout. Long entry or add. And the reason why I typed that is this reason here. What if we get a pullback to the support level? And this is the value of good for you, Franklin. Cool. Very happy to hear that. Good for you. Perfect. All right, so we want to know if we get a pullback to the support level. You can nibble, scratch the itch. Leave a little bit of sensitivity on, not too much. A little bit. There you go. Okay. And we're good. Weekly chart. Good weekly chart, but you got to respect this upper band of resistance at around 750 per share. You can see that we keep getting rejected at that level. Even higher, maybe, even around 588, around there. Daily chart. It looks good. It looks like it's consolidating. It looks like it's probably going to bust out higher. I like the setup. It's looking good. Rick Roofing, BTC, nice pop and just dipped. We'll take a look at it. Let's bring it up. I didn't go over Bitcoin. Bitcoin's looking good. I mean, you would have thought that the Chinese news that they were banning it would have hurt the price. Nope. Bitcoin's looking really, really good here. Here's a weekly chart. Higher lows. Looks like they're going to break this out. We're just shy of a breakout here. Major, major breakout on Bitcoin. I'm loving this setup. It's gorgeous. Gorgeous setup. Okay, that's you. I skipped over somebody. Oh, ASML. ASML. Okay. Monthly chart. We do have a new monthly low. That is not bullish. We broke support. We broke monthly support last month. Horrible weekly chart. Horrible. You know, what they may do here is, we see this all the time, is that after you get a major fracture, a major breakdown of a long-term support level, people go into denial. They don't want to believe it's happening, or they don't even know it happened, and they'll bid it back up. and try to recapture prior support, but that now becomes resistance. So I wouldn't be the least bit surprised to see them limp it back up, especially if yields decline, allowing tech stocks to move up higher. But this chart is not pretty. I don't think that rally is going to last very long. Daily chart. Yeah, it looks like they're going to pop it up higher. You have 1, 2, 3, 4, 5 sequential down days. They're going to rally it. And I bet you that it fails right at this prior lower band of support. I think it can become a short at that point in time, to be honest with you, with a tight stop right below, just in case it does successfully recapture. We got to keep an open mind. So ASML, bearish longer term, short term, I think we rally. So good for short-term pop to the long side. After that, it's probably going to be a short. VRM is going to be the last one. There's nothing here to like. Monthly chart, not a lot of data. Weekly chart, it's going lower. You got to avoid this. This is a bearish engulfing bar. The implication being is that we're probably going to make new lower lows. The probabilities are very high that that's what's going to happen. Daily chart. Yeah, you're coming down here. Again, here's the value of the automated trend lines. I screwed this up. I'm going to have to log back in. Here we go. Okay, so I think we're coming down here. I'm going to take the automated trend lines off. Tell me this is not a time saver. So we're in a downtrend channel. The red line is indicating that that's the upper band of resistance. The blue line in blue is the lower band of support. Every time we tap that red band, the upper band, we pull back. Where to? This line here. This is where we're going next. It's hard to give you a steadfast number because it's declining, so it's subject to change. But you want to buy it as a swing trade off of that lower band of support, and that's currently at around $18.50 per share. But that assumes that it hits it tomorrow. You know, by next Friday, it's going to be much lower than $18.50 per share. The one thing I will point out is this, though. We want to keep an open mind, as always. Possible higher low here on your RSI. Let's bring up the Stokes really quick. Stokes is still a mess. I don't like him. So I would wait for that support level to get hit. And again, at current, let's say it's at 1990 thereabouts, but subject to change. You're welcome, Abel. Anytime, man. Anytime. I got Reddit 48 price target on NFGC. I need some validation on the technical. All right, Tom. Is that Wall Street Bets? Oh, newfound gold. It's been beaten up. I mean, all these gold stocks have been beaten up. I'm a bull on them. The only thing I will say on a weekly chart is that resistance immediately above. That doesn't mean it won't blow through it. If you see gold move up, the gold stocks are probably going to move up as well. They're very highly correlated. But just keep in mind that you do have resistance above. on a weekly time frame. Daily chart. I'm playing around with my new toy here. Daily chart, possible higher lows here. So it looks like as though a base is building. They're trying to break it out, just getting rejected. If you wanted to nibble on this, I have no problem with it. Just add more on a breakout to new weekly higher highs, and that would be attractive. Frankly, yeah, another great weekend. Thanks, you. Yeah, folks, I have a lot of gratitude for you folks taking time out and being here. I appreciate it very much. I would love to get to all your requests. I can't, but if you become a member of the Contrarian Trader, I promise you, I will always go over your symbols no matter what. And as a matter of fact, before I leave, I got to check the members area to make sure somebody didn't pop one in the final minutes. So take advantage of a 14-day free trial offer. Head over, and I guarantee you will never be left out hanging on your chart request. Nope, nobody else, anything else. Folks, thanks for being here. Have a profitable trading week and a great remainder of your night. I'll talk to you soon. Be well.